Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstocks.com. It is Ash Wednesday 2026. Bit of a smudge there on my forehead. And I'm going to take a look with you and the live trading room members at some charts. We're going to look at indexes, a handful of sectors. And then I'm going to do something that I haven't done for a while with either of the two live rooms. I'm going to take you through my stock selection process. I have a variety of different approaches, and it kind of depends on what's going on in the market as to which one I'll use. But I don't have this plotted out yet in my head, but I'll show you a few things that I do to find a short list of stocks that are maybe ready to go. And we'll see if we can dwindle those down through some other selection tips to one or two that are ready to go right now. All right, market's doing pretty well. We've got a bullish day today for the most part. We're off the highs, but we're well off the lows as well. And FOMC minutes just came out, which is a kind of a non-event. So that's always a good thing. I'd rather have a non-event than straight down. And we've got most everything that we're in is green today. So it was a little rougher yesterday, at least for me. I had a little bit too much exposure in the metals. They were weak. Today they're bouncing back up nicely. But regardless, we haven't had a losing week yet in 2026. This one, we need a little bit of work, at least for me, because I took a loss yesterday. And we're about 70% of that back today. So we're getting there. But we only have two more trading days after this because of the holiday on Monday. All right, I'm just rambling. Let me hope everyone's having a great day. Let's get over to charts and take a look. Oh, if you want to join me in the live trading room, go to drstocks.com, drstoxx.com, click the subscribe button, scroll down to the live trading room. And if you want to add on the live options room at a 40% discount, you can do that, put them together. So we've got a new site coming, by the way. It's going to have the same URL, but it's got a lot more functionality. All of our letters are here in one spot. You can mix and match, and you can upgrade and downgrade all at your own leisure. Don't have to email us for any of that. And so it's going to be a lot better, a lot easier for our members. All right, so here's let's go up to the S&P. The mantra of the major indexes, by the majors, I mean the Dow, the S&P, the NASDAQ, and the small cap index, is range bound, range bound, range bound, right? They're all just pretty much going sideways. Not a whole lot of up, not a whole lot of down. Couple of days up, couple of days down, testing the lows, testing the highs. Now, this can be a fun market to trade if you can drill down into the lower time frames, 15-minute chart, 30-minute chart, hour chart, and play off you buy the lows and sell the highs, but you have to be very disciplined. You have to know exit rules. You have to know position sizing and management very well, because you can make a mess of it if you get things wrong, if you take on too much risk or not enough risk and so on. But anyway, that's where we are. So when the markets are range bound, they typically, like this is about 3 months right here. And if we add on maybe a previous range, right, was a little bit wider, but there was a range back here. We've really got more like 5 months of, for the most part, range bound action. Not a whole lot of trending action, except for, 3 or 4 days in a row, 3 or 4 days down, 4 or 5 days up, 4 or 5 days down. And that makes it a little more difficult if you like to hold your positions longer than about 4 or 5 days. In the live trading room, we have an average holding time of about 2.5 to 3 days. So we're still pretty short in terms of our holding time. Over in the options room, it's a lot longer than that. And for the most part, we're trading indexes rather than individual stocks. And some of those indexes and sectors are actually trending really well. And in both rooms, what I'm trying to do, that's kind of what people are paying me to do, that is, we're trying to find where the market is actually moving in a consistently trending fashion. Up or down, don't really matter. But for the most part, we're still trading the bullish side. And we're looking for where is the money flowing, right? Money is flowing into some really cool sectors and some stocks that are just doing really well, but it's not flowing everywhere. And if you're just going to throw on the S&P 500 or the QQQs or the TQQQ, something like that, you're probably going to be disappointed and have been disappointed. You're going to be disappointed because you're just not going to get much of a return over time. All right, so S&P 500, range bound, range bound, range bound. NASDAQ, range bound, range bound, range bound. The thing is, the S&P had that kind of two-tier basing pattern there, with one, the more recent one above the other, which is a bullish trend in and of itself. But the NASDAQ has had a wider range for a longer period of time without the stacking. And so I'd have to say, if I had to choose between the S&P and the NASDAQ, I would go with the S&P 500. Its range is narrower. You've got a range above a previous range, and the breakout toward the top it can get there in a day or two. The NASDAQ's got a lot more work to do before it gets back up here to even think about a breakout. I don't think the NASDAQ is going to be a good place for parking your cash over the next, I don't know, 2 months maybe. My mantra on the NASDAQ is that it should have a good end to the month. So February, we probably get a nice little pop, and maybe that started today. But then we get out to early next week. I think we want to start looking maybe at putting on something short from the NASDAQ, or even something like SQQQ, because I don't think March is going to be all that great for the NASDAQ. The S&P 500, probably about the same. But I do think the Dow and the small caps are set up now to have a better 6-week stretch going out. All right. Now, I always say we trade day to day. I have my biases. I have my maps. I have my paths of least resistance. I draw those out in the maps. I post those in the room and on StoxX and Twitter and so on if you want to follow me. But I always cling very loosely to those. And we only trade what is making rational moves, not what we expect the market to do. Okay. So anyway, one good little thing about the NASDAQ is that it is printing a higher low in the last few days off of the range-bound lows down here. But if you look at the volume balance, it's really, there's a lot more selling pressure than buying pressure. This is an index and distribution. I didn't check the S&P on that. Yeah, pretty much the same thing, although big up day yesterday, big inflow of, and why? Because it hit support. Get down here to support, you're going to see volume shoot way up, probably a nice healthy bounce, and then follow through the next day. So bullish in the last couple of days, but prior to that, a lot of distribution. All right, let's take a look at the small caps, because we are actually long some calls of IWM over in the options room. We just put those on yesterday, and we're getting a nice pop on that one today. This is a trending market. This is not a market that's not range bound. So range bound is for the S&P and the NASDAQ, but not for the small caps. Here we have, with the exception of this big crack down here, and I'm kind of forgetting what that was about, probably tariff related, but with the exception of that, we're actually in a nice looking sequence of higher lows. That's not coming down to the same level of support. That's printing a higher low and then running up from there. And I do think that here's how we want to map this one out. We take a line that's parallel to the support lows and see if we can pinpoint where the pivot highs are. And it looks like it's right about there. Yeah. Okay, so we can say, I think with some reasonable certainty, that the small cap index is trending higher, printing a sequence of higher lows. And so where do you enter? Well, as we did yesterday, you want to get it off of the 50-period moving average. That would be ideal. If it comes down to the STL, the support trend line, you can get it down there. Or you can get it toward the close of the day after it has already tested those lows and bounced back up. That's a little more of a high probability entry. It can come all the way down to the 50, you buy a bunch, and then it just keeps going further south. That does happen. But in an uptrending market like this, the expectation is that when it hits support, it bounces back up and follows through over the next few days. And our target would be the extension of that RTL, the resistance trend line, wherever that meets up there. Okay, now take a look at the volume balance. Yeah, there are a few distribution days in there. You're always going to get some in any uptrending market. You're always going to get the weekends jumping out quickly, or rotation. They get out of small caps, they get into blue chips or something like that. But for the most part, you can see the volume balance is leaning leaning toward the bullish side, accumulation side, which is to say there are more greens than reds. I'm not sure if there are taller greens than reds, but on average, I think that's true. So yeah, this looks a lot better. Now, quick notes about some other sectors. You don't want to be in Bitcoin. You don't want to be in Ether. Both of these are bearish trends, down, 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 down. Every time it looks like it's making a little bit of a bullish push, right? It did in this area right in here. And I actually came out on StockTwits and said, you know what, I'm revising my bearish thesis, which I put on around early November. And I said Ether was going to hit 1,500 and Bitcoin was going to hit 7,500. But then it started doing this here, sequence of higher lows and higher pivot highs. And to me, that started to look like, hey, the trend is reversing. That's not going to hit my target. And then as soon as I made that announcement, it was just straight downhill from there. It hit 75,000, and now we're down in the mid 60s. Ether is under 2,000. I'm quite sure it's going to get down to 1,500. It got to like 1,800 not too long ago. No, 1,750 not too long ago. So I would just avoid those for now. Will they have a comeback? I don't know. I'm not even sure about Ether. I'm not sure it's ever going to come back. I'm not saying it won't, but I'm just saying that I just don't see the value there. But Bitcoin does have value, and Bitcoin does have a big cult following, and I just can't imagine it going off the map. All right. But for now, avoid. Or if you want to take something a little higher risk, you can go short. So let me show you a couple of ways you can do that. You can short Bitcoin with this non-leveraged ETF, which is an inverse of Bitcoin. And you can see how nicely this is set up. Here's your momentum thrust higher, your consolidation pullback, very bullish, right? And now banging up against that downsloping trend line, the pullback line. To me, it looks like this is setting up for another leg higher, and it probably will go very fast. ETHD is a ultra short Ether. So this you get 2x. If Ether goes down 3%, this one goes up 6%. So you can leverage this one a little bit. Same setup, right? Momentum thrust higher on good volume petering off during the consolidation. Exactly what you want to see. That's my, where's my, there, exactly. All right, now the MACD is not exactly where you would want it, but the stochastics are, the cycles are all rolling higher off the lows. And let's take a look at BIDI, the indicators. Yeah, MACD's a little high, right? Kind of looks like it's ready to cool off or ready to consolidate. But stochastics exactly where you want it for a nice pop. And okay, cycles are a little bit mixed. The short-term ones are lower, the longer-term ones are higher. So I would say with this is Ether. I would say with Ether, you still can get a pop higher, but it's probably going to be short-lived. With Bitcoin, much longer swing trade is developing there from the indicators. Now, I wanted to look at a few other sectors. There's the home builders, which I think are ready to cool off. In fact, I don't think there is correct me if I'm wrong, gang, but I don't think that there is an inverse fund for the home builders. I know that Nail is the 3X version for the home builders plus the supporting, like Home Depot and others, Lowe's. But I don't think there's a 3X bearish version of that. Correct me if I'm wrong. There is DRV, which is not the home builders so much as the guys who make money from real estate, who the real estate firms and people that own private equity firms that own commercial real estate and other sorts of things. They're all in that fund. That's DRV. That's a bearish version of that, but that's not the group we're interested in. I think the home builders, maybe because, we're not going to get a rate cut from the Fed until maybe June. Maybe that's why they're going to cool off a little bit. Maybe it's just a momentum reversion back, but it just looks a little toppy, and I think it's probably going to do something like it did back here. I'm not short, just putting that out there. The other sector I'm interested in, let's look at the metals. Gold is, we're long gold in the live trading room through Shiny, and it has been a difficult trade lately, but this is like we saw before with the Bitcoin BITI and ETHD, we have this momentum thrust up, and the big slam down, and now consolidation. And it's a consolidation with this little pullback, what I would call a mini pullback going on here. And there's no guarantee that that's ready to break out. But when you get price kind of bumping up against the same pullback line several sessions in a row, it's only a matter of time before that breaks out to the upside. The macro tailwinds for what do you call it? First, gold and silver, and copper for that matter, maybe platinum. The macro tailwinds are still in place. Nothing has shifted in terms of demand. We're seeing now from some of the miners that are announcing earnings this week that people are paying a big premium for their gold and silver, which means the demand is so strong they're getting it from wherever they can. And I don't think production is all that, I don't think it's going up because of all the regulations. So gold and silver, it's a tricky trade. If you're going to do it like we are doing it now with gold and silver in the other room, there are some clever ways of doing it. One is just go small, right? You can use a leverage fund like we do with Shiny, but then just go small. Just keep it really small and keep a wide stop, right? So small size, wide stop, and give yourself lots of upside. I mean, where would Shiny go if gold hits 500? GLD hits 500. This would be up here 260. And we're in at about the same price now as where we paid, 180 something. And it's 178.40. And if it gets back up to where it was a few days ago, not long ago, this is going to be up at 260. So that would be a nice return for us. Now let's take a look at silver. Here's what we did with silver. So last week, when silver was pretty bearish, the premium and the put values for SLV were starting to rise up quite a bit, right? More than usual. And so we sold short some slightly in the money puts. And for expiration yesterday, because silver has expiration every 3 days. So we got out, we bought it last week. We took the credit into yesterday, and then we got put the shares because the silver had fallen. You can see yesterday was not a good day for silver. We got put the shares, but with the credit from the puts, even with that loss in the underlying, we weren't down very much. We were down, but we weren't down very much. Bump back up today has put us back up above our profit. So now we're sitting on a profit. And what we might do from here is sell calls against those long shares. We're doing this in the options room. It's called a wheel strategy. We haven't done this for a while, but I think silver is lending itself quite nicely to that because of the volatility. All right. So can we be uber bullish on silver like we were back here? I mean, I got into silver, thankfully, for some guys in my pro trading group. I got back into silver in like November on this little pullback here. And somewhere in that area, we have a guy who does cycle work. We have a guy who does Elliott Wave. Both those guys were out saying super cycle and big wave 3 coming, right? So they were both really bullish on silver and gold back in early November, right at the same time that I was getting very bearish on Bitcoin and Ether. And maybe the argument was then that money was coming out of crypto and going into metals. I don't know. But the macro started to line up, did a lot of research on the reason, justification for that. And we started trading in both of the rooms, in my own account as well, started trading gold and silver. And it was a very nice ride. You'd go up for a while, we'd sell out, we'd try to catch the next little dip, go up for a while, sell out, catch the next little dip. And sometimes we just held a position for a while and peeled off some layers of it over time. The thing that I did not do is I held on to both silver and gold on that big crash day too long and lost. I didn't lose all the profits, of course, but a fair chunk of it, right? 40% maybe in silver at least, maybe 20% in gold. So that was frustrating in a single day to have that happen. But ever since then, I've been kind of skittish around swing trading the metals more than just a few days, right? Because of this, there's now some danger there technically in the charts. So we don't want to get too carried away. And I think maybe the macro might be changing. I don't know. One of the lines for silver, at least, and platinum and copper, is that they're used in industrial processes in data centers, and it could be that the whole AI data center boom is starting to unwind a little bit. People are pretty skittish about it, and that's why the big hyperscalers haven't been doing very well. Microsoft, Google, Amazon, and Facebook. They're all well under their all-time highs. So maybe we're witnessing like the dot-com bubble, but it happened a lot faster. I don't think that's the case, but we'll see. Anyway, I'm just throwing that out there. The other sector I want to take a look at, and then we'll start looking for a stock, is IGV, which is your software. And IGV is a casualty of all of the interest in CapEx and investment and success of AI applications. And you can't go a day without reading on Twitter some guy that used AI to do something amazing, right? And when before you'd have to have a subscription to Adobe for your your books and so on, and I'm forgetting some of these. I don't use any of those guys. I just make my own Excel spreadsheet. But there are guys that say, hey, I was just asking AI to do X, Y, and Z, and it came out with this amazing thing that I used to pay Adobe to do, and now I don't have to pay Adobe anymore because I've got this thing. So that really put a crimp in the software sector. And I do think, however, you're going to see probably a lot of the smaller players get eaten up. But the bigger players have so much, they're sitting on so much cash. They're still making very good money. And the valuations here are really compelling. Like historically, they've never had this much capitalization and these low PE ratios, price to sale ratios, price to book ratios, and so on. So the valuations here are really compelling for companies that I just mentioned, CRM now, Adobe. I also like Shop, and I'm not sure about Snow just yet, but Shop is good. Block is good. The big green stick today for Shop. XYZ is Block, also big green stick there. You're going to look at some of the cybersecurity plays. Crowd is coming back quite nicely. PANW had earnings last night that were good, but it's a forward guidance that's been hurting these things, and this one is way down on forward guidance. But again, historically low valuations, still making a lot of money, still showing growth going forward. It's just there's a little bit of a hesitation now about just how good all of that is. So IGV, one way to play this is buy shares of IGV. Another way is to drill down into the top 10. You're going to find Microsoft and Oracle and Cisco and some others in there. And that's one way to play it. I don't know of a leveraged ETF fund bullish for the software sector. If any of you know of that, you can type that into the main room and I will stand corrected. Typically, if I'm looking for something like that, I go to FinViz, I type in the word software, and I show all results. And then if you scroll down here, you should see somewhere in here, ETF Ultra or ETF 3X or Bull or Bear, and there's nothing, right? There's nothing that I see. Okay, so I don't think there is anything other than that. But you do have, where are we at? There's our charts. You do have not just IGV, you have the cloud space, and you have the a similar kind of fund, cloud computing, and then you also have Hack, which is your cybersecurity play. So you can drill down into some of these subsectors and figure out where you want to go with that. I frankly think maybe the best way to play a software comeback, which I think is going to happen if it hasn't started already, is to drill down into the sector and find a couple of 2 or 3 names that you like. Microsoft should be on your short list. Now and CRM should be on your short list. And as I said, I like several that I just mentioned. Let's take a quick look at Snow. Yeah, okay. I wouldn't buy any of these before earnings, by the way. Just don't, because I don't think it's going to be very good until maybe next quarter. All right. Now, here's what we're going to do. With just about 5 minutes left, I am going to open up, if I can find it here, my Microsoft, not Microsoft, Market Surge scanning tool. And I have all my scanners over here. I used to have a best software, but I think I deleted that after the software sector had such a bad. But I have several that I created here, proprietary scanners that highlight the market leaders, the strongest stocks, the trending stocks, stocks that are just in favor, both sentiment and analyst and with the market. And I like to make lists of these stocks that show up. I'll take the top four or five, put them over into a watch list, and then drill down through the charts. Let's do that, right? So I'm going to let's do the 90/90 scanner. So this is the main part of it is 90 minimum comp score, 90 minimum EPS score, and 90 minimum relative strength score. So these are strong earnings, price, and everything else, right? All right, so we've got some down here, ISSC. So I'm going to put this off to the side, and let me make a new list. We'll just call these strong stocks. And I'm not going to put all of these in there. Let me just type in some ticker symbols. Well, there are only 5 that showed up. And that's interesting of itself. So if only 5 stocks pass through my 90/90/90 scanner, I know that there's some real weakness out there in the market. Really condensed. It's not a broad market rally. It's the real strength of the market is located in very few stocks. And I'm not talking just about growth and earnings. I'm talking about price strength as well. Just not a lot out there. All right, ISSC, GFI, which is a gold mining stock, and I think it reports earnings tonight. TSM, right? Probably the best semiconductor stock right now. And no, it's not NVIDIA. VRT is, in my opinion, the best play on data centers. They do heating and cooling. Or is that VR? No, VRT. VRT is the Vertiv. Yeah, that's the one I like. And then Howmet, which is a great company. It is in the military space. They have metal. They have this dynamic metal that almost 90% of our fighter planes being produced now are using. And they have contracts with all the defense branches. And it's a metal that is stronger than steel and lighter than aluminum. Let me say that again. Stronger than steel, lighter than aluminum, and they own the patent on it. Now I'm going to run another scan over here. I'll show you the scan. Whoops. Come on, guys. Work with me here. Anyway, let's just show you the scan. I want to go down to market leaders. We'll run the market leaders scan. So for this one, where did my... here we go. All right, so my market leader scan mimics the what the IBD Investors Business Daily. I'm a partner with them. It mimics what they do to find new market leaders for their leaderboard service. Right? It's not identical. I don't know what their secret sauce is, but I do know the kinds of things they like. I know both the guys that work the leaderboard are friends, and we chat sometimes on IBD Live or on the podcast. And so this is trying to mimic what they're doing. And let me go ahead and type these in now. Oops, gosh, I've got it all messed up. Sorry, hold on. There it is. Okay. Back to this, strong stocks. Okay, we're in some of these. WDC, which is a memory storage play. We were in calls in the live room. Micron. No surprise that the strongest stocks in the market right now, the leaders of the market right now, are the memory group. There's not a whole lot in tech that is leading the market, but this is the one group that you want to be in. We don't have Micron on anymore. We did for a while. ASML, which is a semiconductor play. We've got ADI semiconductor, LRCX semiconductor, AEIS. I don't know this one, so that's interesting. We'll see where that one goes. WWD, Woodward. I know the ticker symbol, but I don't know what they do. And then Modine, which I just came across this morning from an article in IBD. Now I'm going to do one more scan. I'm going to do the IBD 50, but I have a proprietary filter system that will weed out only the best from IBD 50. Sometimes I throw Stoxx in there that, I'm kind of scratching my head. Why is that one in there? But if I can whittle them down to the strongest stocks that are also understood to be the growth leaders of the market. Okay, so let's put in some of these. I see a lot of gold play in here. ASML, we have that one already. OR is a gold play. KGC, Ego. I didn't get KGC. They're all gold. G. Fabrinet is the only one that's not. Okay. Now, here's what we're going to do. We're going to sort these by worst today to best. ISSC is up 10%. Probably an earnings thing. All right, let's just go down the list. Howmet, I already know is good fundamentally. This is not where you want to buy it, right? We're looking for a setup that we could get long today. Let's go down the list here. Come on. VRT, Vertiv. All right, so it had a big up on earnings. Very good. Hasn't closed the earnings gap. That's a power gap. As long as it stays open, it's bullish. And every test that comes down to the top of that gap should hold. It's also got the top of a range. So there's not really a lot going on here that we can work with. 230 to 250 is the range, and we're going to need something a little bit more expansive than that. So let's see what else we can find. All right, TSM is your number one play in the semiconductor space as far as I'm concerned, and all kinds of good stuff going on here. Let's get rid of some of this. So clearly in a breakout, hasn't come anywhere near to testing that breakout, but we're seeing a lot of volume bearishness there, and it could be that it's ready to cool off a little bit. And this pullback, while it is a pullback, is not long enough for my filters to. It's not giving me a buy signal yet. I would like to see it come back to maybe 350, catch it, hold it, reverse it, and then we can talk about getting long. So MOD, it's putting a nice little bull flag here. Right? Here's your flag pattern. And got a nice write-up. When I looked at the fundamentals themselves, I wasn't quite seeing what I wanted to see. So I was a little bit confused about it, but it was getting some... Oh, no, I'm sorry. I'm confusing a different one. MOD is okay. It was ARW is a ticker symbol. It was getting bullish posts on Twitter, but I don't think the fundamentals are bullish. Anyway, MOD looks good. Now, how do you play bull flags? They're a little bit tricky. You can either catch it off of the lows where it got yesterday, the day before, a couple days ago. Get down to the lows. You can buy it there, but you got to set like an alert or something to let you know. Or this is a little bit more of a high probability play. Buy on a breakout off the top. And you'd have to do that preferably on a closing basis and not a real big green stick. Real big green stick tends to come back in the next day. So it's not setting up yet. Here's GFI is reporting earnings tonight. This is a little bit better, but we're already in gold. So I'm actually going to get rid of these. I'm going to get rid of these mining plays. Woodward, don't know what it is, but I like this. And this is what I mean by a flag breakout. Here's your flag. Right? Here's your flag on an earnings gap, which is always good. You don't have a flagpole in there, but you got a big gap, and that's very bullish. You can either buy it off of the support lows like yesterday, or you can buy it on a breakout. Let's wait and see if it closes up there. I'm going to put this on my greens list. I'm going to get rid of these gold plays. Fabrinet. Yeah, looks good. So this is a high tight base. It's up against the top of that base. Right? Here is your consolidation pattern. It was a little scary drop down not too long ago. It was done 420s, and now it was up to 520. 100 points in a few days. That's a pretty big move. But everything here is looking bullish. I don't like the drop down on earnings. That's not a good thing. But maybe the market just misread it. And yeah, I'm going to put this one on my greens list. Get rid of the gold. Well, that looks good. Bullish power gap. Little bit of a bull flag, but it's not. We need 5 bars for a bull flag, and we don't have those yet. Get rid of the gold. LRCX. Okay, yeah, this one looks good. There is your, like a little bit of a head and shoulders continuation, little tiny one, little mini one, and breakout today. I like that greens list. ADI has gone too far. Here's some gold. We get rid of it. Gold, get rid of it. ASML. Yep, looks like LRCX. Same pattern. Very nice. We are already in a WDC, and it's in breakout mode today. We're not in Micron. And what's going on with this guy? But had big earnings, gap and crap, all the way down, closed the gap, which you don't really want to see. That's not what you want on earnings. Something like this is much better, where it gaps up and doesn't ever come back. That's a revaluation. So maybe the market did get it wrong on the bullishness. But once you close the gap and you bounce right back up to new 52-week highs, all-time highs, that looks pretty good. I don't like big green sticks. My rule is don't buy the big green stick unless it is the very first stick, like maybe down here, the first stick of a breakout or the first stick of a pullback. We could say this is the first stick of a breakout, but because it's already the second green stick, we'll have to wait. But I'm going to put that on my greens list just so I tag it and keep track. All right, guys, I got to go. I really got to go. I've been going way too long. God bless everybody. Have a great rest of the afternoon. We'll see you back in the room in just a little bit. Bye for now. See you in a bit.